Hello, welcome everyone. My name is Dr. Rejo Hussein Chongsi. I'm a CPA, CMA, FCIP, CRM designations. Today I would like to discuss the first topic, which is Introduction to Accounting, which is for Chapter 1. We are using a Wiley Accounting Principle, 9 Canadian editions. Alright, let's get started. First thing first, we have a number of learning objectives. From 1 to 6, we're going to discuss this step by step. First one, we're going to identify the uses and uses of the accounting and the objective of the financial accounting. Okay. Why is accounting important? The first thing is to identify the records and communicate the economic events to users, as well as important to the world of economy, provides relevant, reliable financial information, as well as helpful for all business endeavors. It provides a solid foundation for other business disciplines, and it is relevant and useful in other disciplines. Okay. What is the using of the accounting information? First one is for the internal users, number one, and then the second one is for external users. Who are the internal users? People like doing the planning, organizing, and running the companies, which include the finance, marketing, human resource, productions, and company officer. When I was working for Ryerson Alliance Analyst, I was a financial analyst. I provide a lot of financial planning using accounting informations. Also, what is the external users? There will be investors, creditors, labor union, customer regulations, authorities, as well as using for decision of ownership, credit lending, to asset and compliance and performance. Okay, those are the things. When I was working for Nomura as an investment analyst, I do a lot of analysis and financial information investment analysis for investors. Those are the area that we use for the in the accounting information system. All right, use accounting information. Continue. Data analytics. It involves analyzing data to draw inference and used for business decisions and makers to make more informed business decisions. Accounting information is used to support the business decision using data analytics. Objective for financial reporting. Accounting information is communicated to external users via financial statement. The main objective is to provide all useful information to existing and potential investors, as well as to external users such as creditors, to make decisions about providing resources to a business. Learning objective 2. Compare to the different form of organizations. Okay. In the organization form, we have a number of characteristics. For example, proprietary here, unlimited. In terms of owner liability, private will be for the characteristic, taxation will be paid by the owner, life organization will be limited. The difference between the proprietary, partnership, and corporation are detailed in this table. Okay, partnership, you will have 2 or more owners. Corporation, you have shareholders, 1 or more. Owner's liability, for the best one will be corporation because it has limited liability. It can be public or private for corporation. For the others 2, it will be private. Taxation profit will be paid by corporation. The other 2 will be paid by the owner or partners. And life organization is unlimited for corporation. For the other 2 will be limited. Okay. Let's move on to the learning objective number 3. Explain the building blocks of accounting, such as ethics and concept of including in the conceptual framework. GAAP, which is generally accepted accounting principle, is a common set of accounting standard, generally accepted and universally practiced. It developed from a guidelines, assumption, and concept. Accounting and ethics. For information to have value, it must be prepared by individuals with high standard of ethical behaviors. That's the key part. The standard of conduct by which actions are judged or as right or wrong, and honest or dishonest, fair or not fair, is called ethics. Accounting, like a CPA and CMA designations, have the highest quality standard that we must uphold. Okay, if not, we're gonna lose our credential and we're gonna lose designations. One of the utmost important to the accounting and decision makers is rely on the financial information that they have produced. Okay. Now, what is accounting ethics? Ethics is the standard of conduct used to judge actions. What are the steps being used to analyze ethical cases and situations? Number one, identify ethical issue involved, identify stakeholders, and the person or group that may benefit or face or harms. Okay? And number three, consider the alternative causes of action and consequences of each of the various stakeholders and select the most ethical alternatives. Okay? Consensual framework. Coherent system framework. Coherent system that guides development and application of account principle and standard. Okay, leads to the objective of financial reporting is to provide information in assisting user in making decision making. Okay, look at the conceptual framework here. We have the top, which is the objective. The second in the pyramid is the element of the financial statement. The third is qualitative. The fourth is recognitions and measurement. The last one is the foundation. So it's bottom up here, the pyramid. So you take a look closely. The first thing is that the concept and assumption must be a going concern assumption. It has periodic and monetary units. Okay. Alright, conceptual framework. Fundamental qualitative characteristic is the relevance, faithful representation, and neutrality. Second is enhancing the qualitative characteristic, comparative consistency, variety, timeliness, and understandability. Okay. In terms of recognition and measurement, there's recognition is the process of recording a transaction in the accounting records. Number two, measurement, determining the amount that should be recognized. Number one is historical cost, is the primary basis. Use, which has to be reliable and verifiable. It means that your data has to be reliable. However, may not be relevant, okay? And it has to be able to be verified. Number two is the fair value. It may be relevant, the amount concerned is sold in the open market. Reporting entity concept. The recording of the reporting activities of a unit, organization, society must be kept separate and distinct from other reporting entities and owners. It must have a going concern assumption. The reporting entity will continue to operate in the foreseeable future. Periodic concept, user require relevant accounting information. Business divide up the economic activity into distinct time period. Okay. Alright, what are the accounting standards? The accounting standard is the responsibility of the Accounting Standard Board, which is the ACSB. Publicly accounting enterprise must adopt the IFRS. We call it International Financial Reporting Standard. When I was working for BMO and Travels Canada as well as Intech, I was working on IFRS 17 project for those insurance companies. For BMO, it's a different numbers. Non-publicly traded private companies may adopt accounting standard for private enterprise, or called ASPE or IFRS. Now everyone is moving into the IFRS system. This is the standard of reporting, okay? Excuse me. Learning for objective, describe the elements of financial statement and explain the accounting equations, okay? What is asset? Balance sheet consists of two things: asset, okay, liability, and plus owner equity. We're gonna not two things, three things, okay? We're gonna discuss here. The first one is asset. Asset is the economic resources controlled by business. It's used to carry out activities such as productions and distributions and have the potential to produce economic benefits. And then on the liability side, it is an obligation arising from past event to make a future payment of asset or services and present debt and obligations. Okay? And the third portion, which is the owner or equity, it represents the owner claims on assets. Owner's equity equal to asset minus liability. Components of owner's equity, which is statement of owner's equity, investment, is asset put into business by owner, drawing cash or other asset withdrawn by owner for personal use. Profit equal to revenue minus expenses. Summary of changes to owner equity, which is if there's an increase in owner's equity, is done by number 1, investment by owner, or number 2, by revenues. If it is decreases, it is because of the drawing by the owners or by the expenses. Okay, these are the accounting equation in the owner's equity. Alright, accounting equations. Asset must be equal to the sum of liabilities and owner's equity. Liability are shown before the owner's equity because the creditors can claim they are paid before the ownership claim. Okay, what are the economic resources? Is the asset equal to liability plus owner's equity? We can claim to the economic resources. Okay, so these must have balance. The left side and the right side must balance. Okay. Income statement. Income statement consists of two numbers of key points. Revenues. Number 1 is revenues. Increase the owner's equity. It is resulting from any business activities that are performed to earn profit. For example, I'm selling samosas. That makes money in terms of profit. Result in the increase in asset or decrease in liability. If I make a profit, I will increase my asset. If I make a loss, it's the other way around. Expenses. Expenses decrease the owner's equity. The cost of asset consumed or service used. The result can either decrease in asset or increase in liability. This excludes withdrawal made by owners. What are the example expenses? Again, the first example I give you, I sell samosas. What are the expenses related to making samosa? Number 1 is the oil. Oil will be expenses. Flour is also another cost, right? And then the labor to make that is also an expense. Okay. Look at the third one. It's called cash flow statement. Gives an information about the cash receipt or cash payment for a specific period of time. Report for cash inflow and outflows. It is a result of operating activities during the period. It is either from investing or financing transactions. So there's 3 areas that can get in the cash flow statement. Operation, investment, and financings. Okay. Accounting and reporting equity, the decision by form of organization. You can see the bracket here, properties, partnership, or corporations. Okay. In terms of equity sections, owner's equity for propriety, partnership equity will be in partnership, shareholders equity will be corporations. Profits is all increase of owner's capital in the corporation will be increase in terms of return, earnings. In terms of withdrawal is, see the graphic here is drawing account and owner's capital, drawing account, partner's capital, dividend account, retained earnings. So it is the statement of owner's equity or changes of equity. The upside arrow means the account is increased or added to. The downside means the amount is decreased or subtracted to. Okay. Now let's say look at the accounting equation expanded. Asset equal to liability plus owner's equity. What are the detail in owner's equity? Owner's capital minus drawing plus profit or minor loss, which is revenue x expenses. Look at this logic, okay? We're gonna discuss this in later chapter in detail, okay? Look at the next one. Learning objective 5. Analyze the effect of business transaction on the accounting informations. Transaction analysis, okay? Accounting, identify, record, and communicate the economic events of an organization. Only the event that cause changes in asset, liability, or owner's equity are recorded. Accounting equity must be balanced. Okay? Example here. The first example. Owner invests 15,000 cash in computer business named SoftBee. So whatever here, the basic analysis, the asset cash increased by 15,000 and owner's equity account increased by 15,000. Look at the equation analysis. Cash plus 15,000. Owner's equity increased by 15,000. Okay? That's the first example. Second example, purchase of equipment for cash. SoftBee So Byte purchased computer equipment for 7,000 cash. So the basic analysis is that the asset cash is decreased by 7,000 and the asset equipment is increased by 7,000. Look at this. Cash is decreased by minus 7,000, the equipment plus 7,000. All will be still 15,000. Okay? That's the second example. Look at the third one. Purchase of supplies on credit. So Byte purchased supply that will last several months for 16,000 account. Asset supply increased by 1,600. Okay, and liability account payable is increased by the same amount. So you got supplies here plus 1,600 on the asset side and liability plus 1,600 on the liability side. Both will be equal. Left and right must balance. Okay, just like walking. If you're not balanced, it's going to be limping. Okay. Look at the next one. For example, service provided for cash. Byte receive from customer to 100 cash for programming service it has provided. So the asset cash increased by 1,200. Owner's equity service revenue increased by 1,200. So in the asset side, you get an increase 1,200 here, number 4. And the revenue side, you got increased 1,200 side. Okay, that's the analysis, and that's how you book it. Okay. Fifth one, purchase advertising on credit. So Byte receive a bill of advertising for 250, which pays at a later date. The liability account payable is increased by 250, which pays at a later date. So what happened here? 250 plus 250 on the liability side and expenses minus 250. Remember, is for advertising on account. So plus 250 on account payable and minus 250 on the expenses. Next example, service provided for cash and credit. So I provide 3,500 for your service and receive payment 1,500. So you got two components here, 1,500 cash, 2,000 account receivable, and revenue total 3,500. On the left side, you add total 3,500. On the right side, owner's equity, you add 3,500. So it's balanced. Okay, remember it must balance. Excuse me. Number 7, payment of expenses. Expenses paid, cash rent is 600, salaries is 900, utilities 200. Okay, so you're gonna total both will be 1,700, and the owner's equity expense. Let me go back here. My accident. 1,700. So owner equity expense increased by the same amount. So you got here cash minus 600. Minus 900 minus 200, total 1,700. Expenses is the same story. So you have to book the same thing. Left and right must balance. If it's not balanced, it's not right. Okay. Look at the next one. Example, payment of the account payable. So Byte pays its outstanding advertising bill of 250. So you're gonna have a decrease to 50 in cash, and you have a decrease in account payable by 250. Okay. Those are the example of number 8. Number 9, receive cash on account. So Byte receives 600 on cash, customer billed in transaction 6. Okay, so cash plus 600 from cash customer bill and account receivable minus 600 because you have received the payment. Okay. Number 10, sign a contract to rent equipment. No effect on the accounting equation because asset, liability, and owners have not changed. Okay, there's no effect. You just sign an agreement. Accounting taxation has not occurred. Okay. Number 11. Byte owners Andrew Leroy withdraws 1,300 in cash for his personal use. So what happens? You're gonna withdraw cash minus 1,300, and you're gonna minus 1,300 in the drawing same times. Okay. So that's the number 11. So on total, we're going to get a summary of payment here. All the detail like this. Detailing number 1 to number 11 is all of the transactions. After that, we're going to go to the next one, which is the learning objective number 6. Prepare a financial statement. When we do that, we're going to do several accounts. Prepare all transactions. Identify the records. Number 1 is the income statement. Number 2 is statement of equity. Number 3 is balance sheet. Number 4 is the cash flow statement. Okay, it each has the detail of it. interrelation statement. Therefore, look at this, the detail. We have the revenues here with all the expenses, 1950. We got a profit of 2750. When we get a profit 2750, all these profits gonna go to the investment or retained earnings. And one is that we also have a withdrawal here. We got the total of 16,450. Look at this, the detail of the financial statement. Once we get here, cash is 8050, unit capital 1640, and we got look at the cash flow statement in terms of operating activities. We have cash operating activities here. We have the investing activities here, financing activities here, all detailed. So at the end, we have a cash September as of 30th 8050. Okay, go back again to make sure you understand the step. Okay, you have to prepare the income statement, statement of equity, balance sheet, and cash flow statement. Then you put in number one, income statement. You got the profit here. You go into the statement of owner's equity in the retained earnings. Once you get that, you get the detail of the end of the total of the statement of owner's equity. Once you get that, you create the balance sheet, and then after that, you also create the cash flow statement. So that is basically the end of this chapter. Here is the copyright, which is coming from John Wiley Son 2020. Alright, thank you guys. Hope to see you soon. Okay, this video is made for non-profit and for educational purpose. Thank you and see you soon.